Good morning, everyone. Hope you're doing well. Risk sentiment overview for the 11th of the 10th, 2022. We have, we had quite a bit of UK data, and so we have to obviously take that into account for the trade of the day. And the trade of the day is to do with the pound, so we have to be really, really careful. We're only using the average bubbles, and that's the logic. We should try and take into account fundamentals and things like that. And there's lots of news, or so I say noise, around the pound right now. So you've got to be really careful with the pound, especially for our trade of the day. Yesterday's trade of the day was a negative. We had the Australian dollar, New Zealand dollar, and we had a 24 pip loss on that. Initially, it did very well, and then the risk fluctuated, and we went significantly risk off, and obviously impacted the FX. So the UK and the Euro bonds, also the gilts and bonds, or the bund, they sort of went a bit parabolic yesterday, and that caused a lot of uncertainty in that FX space. So we've got to be really careful. Yes, we risk off at the big picture, and we risk off at the 24-hour difference as well. Look at your S&P; it's heavy, and that's possibly one of the reasons for it. Is that obviously we've got all that Fed policy stuff, the QT, and interest rate hikes, all this geopolitical stuff going on, and the fact that retail guys are buying the dips, which doesn't help because there has to be someone to take the other side of that trade. Okay, VIX is high, we're well above the yearly pivot, and we might continue higher. I thought maybe we looked a bit toppy, but there are lots of things causing that to escalate higher. Putin was saying about retaliation, and he called that Crimea Bridge a terrorist act, so he bombed lots of Ukraine cities yesterday, so it's all a bit crazy. So you've got to be careful, and because of the risk-off nature of the markets, it's going to impact FX, and it's going to impact our trade of the day. So I might just sit on my hands today, I'm not sure. Yesterday was pretty crazy. I just looked at a lot of price action on doing the Bulletin, and a lot of the things were very, very messy. And there wasn't really any sort of particular structure that I wanted to be taking part of. So the yields, see, this is the thing, is that the yields, they dipped at the short term and they rose at the long term, and that would probably be okay if it continued to do that. So this isn't necessarily that risk off. Ideally, they'd all come down, but the fact that these did come down and those rose, that isn't too bad because we don't want to see an inversion. This would be like a return to normality almost. So we'd want to see a continuation of this tomorrow, but I'm not sure what's going to be, that's going to entail tomorrow. So we're out of bonk, but we did have a 12 and a 2-year inversion. So that's possibly a good sign there. That actually had inverted those two, and now we've reverted. But they have to come down. These have to come down, the short dated yields. That's important. It's too high and it's risk off. VIX is above its 52-week midpoint, so 26.5 is definitely worth putting a notification on TradingView, so you get like a pop-up to say we're below or above that level. It's an important level. So quite a bit of red cells, but AJ was the biggest mover, you can see, and they're buying a lot of stuff. Right, they were selling a lot of stuff last week, and now they're long a lot of things. So they're long on the S&P, they're long the cable, US 30, gold. And there's the King dollar. So that's like 3 weeks now. We tried to they've tried to fight back on the dollar, but it's just that it slapped it down again. The pound really had a heroic attempt, really, really strong attempt at trying to combat the USD, but it just got hammered back down again. And we're back to where we were. So that would have chewed up a lot of retail guys. I said it would, and I was right. It was absolutely horrendous. I'm glad I didn't trade it. You have to have been quite fortunate to make profit on both directions on the pound USD, because we really fell, then we really rallied, then we really fell. So you'd have to be like a super trader to have caught all those moves. And we're back to minus 23% return on the year, which is really bad. Kiwi USD is actually a bit weaker than the pound. And so there's AU, it's the laggard, and you see dollar CAD is the leader. And this is the difference from last Tuesday. This isn't reset every weekend. It just takes the data for where we are now and to where we were last week. at this time. So you need to subscribe to us if you want to join, but do note our trader day is pound related, and it's a bit of a gamble, to be honest with you. So be very, very careful. I'm not even sure we're going to have a trader day tomorrow because we've got FOMC. I'm not even sure we're going to have a trader day on Thursday because we've got CPI. So ideally today's trader day does well. You know, we kind of want a positive week, but I can't guarantee it. Things are very, very choppy and volatile right now. But if you did want to join and get the bulletin, it's £8 a month, which is pretty reasonable. Just note that if you take the trade a day, do a little bit of diligence and do a bit of research as well. And maybe pound wouldn't really be on your, shouldn't really be in your portfolio because of the volatility, unless you fancied a little dip in, dip out with a tight stop potentially. But see, we're quite risk off in the S&P. This is the daily chart. This is the 21 moving average. You know, it's falling and it's going to act as a resistance. They're long on the S&P as well, and they're long on the DAX, although we're sort of teetering between buy and sell because we're close to zero. S&P, so they went long, then they buy in the dips, and every time they buy the dip, they have to get punished, and they bought the dip. So logically, we have to fall in order to flush these guys out, but they can't be buying. If they do, they're going to get destroyed, and they're actually, I'm going to blame the retail guys for this. If they were not buying these dips, I don't know if this would be falling so heavily. It has to flush these guys out. This is the dumb money, and they're a great form of liquidity, but there has to be someone to take the other side of that trade and that bias. So if they're long, we should be selling. You know, look up here. One entry we would have got after we flipped to sell. And an entry up there. Admittedly, that candle would have probably taken you out because you'll stop, which is quite naughty, but you could have resumed, and down we came. So that's them guys buying the dip. So we're going to probably a risk off day again because of that. Note that my video on Saturday was quite accurate. I was saying we were going to be risk off, and we were, so that was good. US 30, buying the dip, so same thing. So this would be fake, this candle. This isn't legit. It's like a bogus candle. DAX is now sideways, and the level of interest here would be your swing high, and then we had a double top there. Can you see that horizontal? So that's quite a spooky level. Maybe if we had like a volume profile, that would be a quite a strong point of control there, where a lot of volume entered short and a lot of volume short there. So if we overcome 12397, it might fly, but you want to be careful of the geopolitics. Gold. So we had a sell. Well, you know, we were a sell at the big picture anyway, but they went long, and you know, we could have even argued there, to be honest with you. We could have like had it there. So it's more than a $50 drop. Yeah, it could have been like a $60 or $70 drop just from using this indicator. So it pays for itself. Well, in fact, it's free. So, you know, you've got to get the trading station. It's absolutely amazing. There's the link for the FXSI promo code. So click that if you want to get a discount. And the largest stock loss cluster is NU. And so that's of note. That's new. And it's above at 5585. Whether or not it's going to be safe, it probably will be because we're risk off. So we shouldn't be going up to get that stop loss cluster. And the key here is to get the sales to align. So NU is red, red, green. So there's a mismatch. All right. So dynamically, it's a buy. At the static level, it's a sell. They shorted it. Okay. So there's a mismatch. So you probably might not want to take NU because of the mismatch. Ideally, you have something that's green, green, like dollar CAD or dollar Swiss. You see, gold is a match. So it should help, hopefully. Hope you understand that logic there. We've got quite a bit of mismatch there. So take the ones that are in alignment. Failure rate is 57%. So we know that we should see a reversal on Swiss. We should see a reversal on yen. And they're the safe havens. So they shorted it. And so price should be up a bit more. And likewise with the yen, they went long. So price should be falling. But probably they need to buy a little bit more because it's only a small little shift there. So yeah, that's the logic there. So once they go one way, price should do the opposite basically. So we get a metric of their failure rate. So it's quite useful and see if they're getting paid or not. And 57% pretty much like a casino, so you might want to wait for that to get a bit higher. And a little thing about that, if it below 50% is unusual. If it was below 50%, then the herd majority would be getting paid, and that would be really unusual. So, you know, you'd want that a bit higher, but it's probably okay-ish where it is. As long as it's not below 50%, they shouldn't be getting paid as a majority. Now, 8N encountered a negative 24 pips. Lots of things going on with risk off and on flows. It was impacting this particular pair. In fact, it was impacting the whole FX space. It should have probably done quite well, but we had a lot of fluctuations, and the key is not to have a large loss and to have your risk management in place. So it's not too bad, but I don't even know what today's trade of the day is going to be like. It might be horrible. Just remember, the pound is currently risky if you are to take the trade of the day, but we have to use the average bubbles. That's the way we do it. Back to extremes. So boring. Euro pound is neutral, but everything's back to extreme. So it's like, do you sell these now? Technically, yeah, they're good, but are we not overdone? I mean, I'd imagine we should be getting close to being oversold. Technically. So yeah, I'm not a fan of trading these extremes, to be honest with you. So economic calendar, we had lots of UK data. We've got a bit of UK data tomorrow. We've got GDP. Be careful with that one. We've got PPI, then FOMC. After that, we've got CPI. So I don't know if we'll have a trade of the day tomorrow. We might do, but we won't have one for CPI. And then we'll have one for Friday. And then it'll be another week's over and done with. So it picks up tomorrow and gets very volatile if it wasn't volatile enough already. So keep calm, always trade safely. I'm going to do a quick 2-minute video for the private feed, and just be careful, especially around the pound as well. It's like the UK gilt market was exploding, making the biggest moves in decades, just in a single day. So be really careful with the pound, and there's no harm in just watching as well. We'll just see how we go. Be careful, and I'll speak to you soon.